So as we're winding down the month of December, we're winding down 2020. And by all accounts, most people are giving 2020 1 star, maybe a half a star, right? Do not recommend. But I will tell you, as a trader, 2020 has been really good as far as trading goes. And I think it's going to be on the 6th of January. I've got a webinar coming up that's going to go take a look back at 2020, talk about market trends, and talk about the way in which I'll be very happy. In fact, I would count myself lucky if 2020 the markets behaved the way 2021 behaved the way 2020 behaved. So there's a lot to like about the way in which we're setting up for next year. However, again, kind of funny to talk about how great trading can be, has been, and I think will be. And then now we're going to talk about, well, when not to trade. And I think that's probably one of the most important things that we can emphasize as traders. In the past, I've talked about do not trade lists. And today I'm going to talk about do not trade sessions, do not trade days. And again, there are, of course, exceptions. But for most traders, certain days every month are going to be caution days. And all that means is if you're going to trade at all right, if you're going to trade at all, you want to do so with smaller size. You want to do so more conservatively. And you want to do so when the setups are about as textbooks as you can find. All right. Kind of difficult to find textbook setups on options expiration. Let's talk about why and what a caution day actually means. Why I recommend that certain days of the month you really just don't actively trade. Believe me, gang, the markets are going to keep opening. You're going to have more opportunity. The ability to put your keyboard and mouse in a drawer and do something else is really going to save you money. Now, why is that? When we have a caution day, this could be non-farm payroll. This could be FOMC days. This could be days like options expiration. We want to be cautious anytime Jerome Powell speaks. Right? We want to be cautious on certain days because the predictability of the technical analysis that we rely on, the stability of the volume that we rely on, the volatility that we gauge, they can not be as high probability as they typically would be. So it's really a caution day because of whatever the event is, options expiration today, things become low probability. They may be things that will work great on Monday, and they may have worked fine on Thursday, but Friday, because of the caution day, the probability of their effectiveness just sinks, okay? Now, as far as the volatility for today actually was not a volatile day, gang, right? It really wasn't. And how do we say that? Well, a lot of times people will use, and be careful of this, people will use the word volatile to describe a day where they just got their butts handed to them, okay? And that's okay. We all need a reason. But volatility really was not a factor. Neither was whatever I just spelled here. There we go. Volatility was not really a factor today. Why would I say that? Because when I take a look at the typical, again, these are historical hourly price movement ranges, we weren't really trading beyond them in any huge way. In fact, you can see that for some of the morning, it was really just quite sedate. If we're not trading higher and lower through these hourly price movement support and resistance levels, we really don't have a much more volatile day. And you can see today really wasn't that volatile. In fact, while a lot of people will say options expiration is very volatile, I generally find it not the case. It'll find a range. It might gravitate towards certain levels or open interest and volume are a little thicker. We can talk about that a little bit more in the premium video. But just what I will say is it typically doesn't behave in a way that the market might have responded yesterday to in terms of setups. So keep that in mind. I know this is kind of harping on this topic, but I see traders do this on caution days like options expiration a lot, which is they think the market's going to be volatile. Again, gang, it really wasn't at all today. This is very sedate price action. This is the S&P, by the way. And This is not a day you want to saddle up and start firing off trades either. So please heed the caution day. It's okay to stay flat. Flat is a position. I'd rather look at my book today as I did at 11:30 and say, gosh, I didn't do a darn thing. All right. And then Monday I can start off the session with fresh eyes. And that's sometimes the most disciplined thing we can do. So really, it's a discussion on discipline. All right. And I hope that serves you, because we're going to have a whole lot more of these. We got another options expiration next month. We'll have Fed events. We'll have non-farm payroll, all sorts of things. So keep this in mind. All right. It will save you money.